Public pension reform is one of the most heated political issues in many countries. Recently, we can see reports in the international section of the news about Russia's public pension reform and Putin's drop in approval ratings. Reform of Korea's National Pension Service, or the NPS, is also a heated issue. The NPS was established in 1988 to care for Koreans' life after retirement. Grown to be the world's largest public fund, with over $550 billion, the fund is expected to be depleted by 2057. The depletion has to do with its structure that guarantees to give more to pensioners for what they contributed. Unlike in the 1980s, when the fund was architected, Koreans now live longer, the interest rate is lower, and the birth rate has dropped. Some even predict the NPS may run dry earlier than expected. In this situation, reform of the current system is inevitable. Pensioners will have to pay more into the fund and be paid less when they collect. The minimum age for pension reception may have to be pushed back, so retirees must wait longer to receive their money. In the meantime, the fund needs to look for more diversified income sources to raise the fund's return. The birth rate also has to be boosted, as a decrease of the younger working population diminishes the amount of money added to the fund. This kind of reform that cuts the benefits for pensioners will inevitably face public resistance and backlash. But many point out if we don't do something now, there may be bigger repercussions later. Most Koreans don't have any other plans for life after retirement than depending on the NPS. It's an issue directly linked to every generation's future. The interest rate, along with the birth rate, is the lowest it has ever been. The NPS did not prepare for this kind of situation. The NPS did not forecast low levels of interest rate and births in the future. So I said the NPS did not forecast. You might have heard of the weather forecast, but we also use it for financial prediction. So the NPS did not forecast. That means they did not predict this would happen. Big changes are coming for the NPS. Koreans will have to pay more into the system, get less returns, and extend the minimum age to receive their funds. So I said they're going to have to pay more into the system and get less returns. So if you're part of the pension system, every month you pay a portion of your salary into the system. So we say pay into. So every month you pay into the system, but get less returns. So your returns are the profits or percentage that your stock or something of value has increased. So, if you invest something that's $10 and you get $12 back, you have a 20% return. That's pretty good. But right now, under the current predictions, you're going to be paying more into the system, but getting less money back. A major overhaul is coming for the NPS. Koreans may have to pay a larger percentage of their salary into the system, but receive a lower return. In addition, they may have to wait longer to receive their benefits than before. So in the beginning of the sentence, I said a major overhaul is coming. And a major overhaul is a big change, a very big reorganization. So overhauls in companies are when they lay off people or there's a merger or an acquisition. It means just kind of a very drastic, large change somewhere is an overhaul. Many Koreans are relying on their national pension to support them after retirement. A lot of Koreans have no other financial option other than the national pension they will receive from the government. All hope is not lost for the NPS. Government involvement in the future, combined with increased taxes, will inject money into the fund and could stimulate growth for the pension system. So I said, all hope is not lost for the NPS. So all hope is not lost is we're in a bad situation and we think there is no hope. If there's just a little bit of hope left or a little bit of chance of success, we say all hope is not lost. And then I would say that combined with the increased taxes will inject money into the fund. So if you think about injection, you get one at the doctor or a needle goes in you for drugs or medicine. We also use to inject money into something is when we do that, we're doing that in hopes of growing an investment or making more profit. So, or to continue a business. If a business is losing money, you inject more money into it, you can keep the business open longer. And I said you inject money into the fund and that could stimulate growth of the pension system. So to stimulate growth, if you all remember in 2008, when they had the big stock market crash, the government had a stimulus package, means we were going to put money, taxpayer money, into the economy and hopefully stimulate it, get it moving, get it growing again. So we use it. Stimulation means to excite or to get something moving, but we also use it for money. The NPS is not all doom and gloom. The government can use quantitative easing to boost investment and hopefully returns in the NPS fund. So I said the NPS is not all doom and gloom. Again, if doom and gloom means everything is hopeless, there's no hope, nothing good will happen. But if you say the NPS is not all doom and gloom, that means some positive things could happen. And then I said the government can use quantitative easing. So quantitative easing is the new word we use for government stimulus packages. So when the government wants to take tax money, put it into the economy, they don't call it stimulus anymore. They call it quantitative easing. So it's a new word that we're using now. Allocating tax dollars to a fund that is bleeding money is not financially responsible and may jeopardize the financial certainty for future generations. So I said allocating tax dollars to a fund that is bleeding money. So bleeding money means you're losing money quickly. A person can be bleeding money, a company, a small business. It means you're losing money very quickly and you're not making profits. That's called bleeding money. And I said it is not financially responsible and may jeopardize the financial certainty for future generations. So to jeopardize is to risk. If you're doing something that's not correct, it may risk something bad may happen. So since the fund is bleeding money, this situation may jeopardize the financial security for future generations. So the financial security for the future is at risk. It is jeopardized. Gambling away taxpayer funds is not the best way to save the NPS, and it is unfair to future retirees who are still working. It is like robbing Peter to pay Paul. So first I said gambling away taxpayer funds. So gambling away is when you are, if you're investing in the stock market or mutual funds or investments, it's kind of like gambling. So if you're investing and losing money, you're kind of throwing away or gambling away your money. You're losing it very quickly. So we use that expression kind of in extreme cases of losing money. We say he gambled it away. He kind of invested in things that he should not have or she should have not invested in, and they were not smart investments. So we use that expression gambling away. And then I finally said, it's like robbing Peter to pay Paul. Basically, the origins of this expression go back to England when one debt of a church was used to pay off another debt of a church. So we use this expression to rob Peter to pay Paul means we're taking money from one source that's already not financially stable or in debt to pay off another thing that's not financially or stable in debt. It's not sustainable. So we say if you're doing that to pay off one debt for another, will not make profit or will not make financial sense. We say it's like robbing Peter to pay Paul. Thanks, guys. Thanks for downloading. Talk to you later. Bye-bye.